Good day everyone, I'm Saligumba of PSBA FM 23 and I will be reporting about investment companies. So first, what is investment? Investment is a monetary asset purchased with the idea that the asset will provide income in the future or will later be sold at a higher price for a profit. So the term investment, it may refer to any mechanism used for generating future income. So in finance, this may refer to the purchase of bonds, stocks, or real estate property. One thing that we should remember in investing is that it is oriented toward future returns. So this means that when we invest, it entails some degree of risk. A risk of whether we will lose money or earn profit. Now, let's go to investment companies. Investment companies are a stock corporation engaged in the business of investing the pooled capital of investors in financial securities. So, investment companies, they manage, sell, and market funds to the public. The money that is pooled is invested and investors share any profits or losses incurred by the company. Investment companies make profit by buying and selling shares, bonds, properties, or other assets or other funds. So, investment companies are also known as fund company or fund sponsor. So, the main function of investment companies is that they hold and manage securities for investment purposes, but they typically offer investors a variety of funds and investment services like record keeping, portfolio management, accounting and taxation management, and others. Now, we will discuss the types of investment companies. There are three types of investment companies: the closed-end fund, the open-end fund, and the unit investment fund. But first, let's discuss the closed-end fund. So, closed-end fund, it issues a fixed number of shares which they sell to the public to raise money to purchase investments. They also have a professional manager who is responsible for overseeing the portfolio and is actively engaging in the buying and selling of holding assets. In a closed-end fund, shares are not redeemable because investors who want to sell their shares will sell it to other investors in the secondary market, and the price is determined by the participants or the market. So here we have examples of a closed-end fund. First is the municipal bond fund, which invests debt obligations of the state and local governments and government agencies. And another example is the Eaton Vance Tax Managed Global Diversified Equity Income Fund, which is one of the largest closed-end funds with a market capital of $2.46 billion as of April 2019. So here are the pros and cons of a closed-end fund. So for the pros, it has a diversified portfolio, it has a professional management, transparent pricing, higher yields than open-end funds. And for the cons, it is subject to volatility, less liquid than open-end funds, available only through brokers, and they may get heavily discounted. Now let's go to open-end fund. So in an open-end fund, they issue an unlimited number of shares, and shares are priced daily and are redeemable, unlike closed-end funds. Operated by a professional manager who allocate the fund's assets and attempt to produce capital gains or income for their investors. So here we have the pros and cons of an open-end fund. So for the pros, they hold diversified portfolio which lessens the risk. They offer a professional money management. They are highly liquid. They require low investment minimums. And for the cons, they are priced just once a day. They must maintain high cash reserves. They charge high fees and expenses, and they post lower yields than closed-end funds. So the third type of investment companies is the unit investment fund. So they offer a fixed portfolio, generally of stocks and bonds, as redeemable units to investors for a specific period of time. So Unit Investment Fund, or UIT, is designed to provide capital appreciation and dividend income. So capital appreciation refers to the increase in the price of the assets or increase in the value of the assets, and dividend income refers to the payment of a corporation to their shareholders. So how investments are sold? So first is open-end and UITs. Investors can redeem mutual fund shares or UIT units at net asset value to the fund or trust, either directly or with the help of an investment advisor. So open-end fund and UITs are redeemable at their net asset value, which is defined as the total value of the portfolio divided by the number of shares or units outstanding. And for closed-end fund, they are not redeemable and they are sold in the secondary market at the current market price. So just like what I have said earlier, the market price of a closed-end fund is based on the demand of the investors and they are not based on their net asset value. So here are some of the best investment companies. First, we have the BlackRock, BNY Mellon Investment Management, Capital Group, Fidelity Investments, Goldman Sachs, PIMCO, Prudential Financial, State Street Global Advisors, Vanguard, and the JP Morgan Asset Management. So before we proceed to the law about investment companies, here is a brief history about the law. So the law, which is Republic Act 2629, or known as Investment Company Act, was with us on June 18, 1960s, but its implementing rules and regulations were promulgated on October 31, 1989, and after some years, on April 1998, the law was amended and it became effective on May 12, 1998. So now, let's proceed to Republic Act 2629, or the Investment Company Act. So, classification of investment companies in the Philippines as stated on Section 5 of the Act. So, we have three classifications: the closed-end fund, the open-end, and the unit investment trust. For the registration of investment companies under Section 7, so in order for an investment company to operate, they must first register with the Securities and Exchange Commission. They can register by filing a statement registration in the form prescribed by the Securities and Exchange Commission. And on Section 24 of the Act, it also requires the securities to be registered under the Securities Act, or also known as the Revised Securities Act. So, investment policies under Section 12. So, unless authorized by the vote of the majority of its outstanding voting securities, investment companies may not do any of the following. So they cannot borrow money, they cannot issue senior securities, they cannot underwrite securities issued by other companies, and they cannot also purchase or sell real estate or commodities, they cannot make loans to other people, and they cannot also deviate from any fundamental policy or investment policy stated in its registration statement. So next is no investment guarantees as stated in Section 21 of the Act. So it states there that it shall be unlawful for investment companies to guarantee any obligation of whatever kind or nature. So this means that investors have no guarantee that they will earn profit when they invest. So that's why I said earlier that when investors invest, they should always remember the risk the risk of whether they will earn money or lose money. So, agents and investment solicitors on Section 40 of the Act. So, only agents or solicitors who have obtained the Certificate of Authority from the Securities and Exchange Commissions are the only ones who are allowed to do the selling of shares. And as a prerequisite to the certificate, they should have also taken and passed the Investment Company Representative Certification Program exam, which is also given by the Securities and Exchange Commission. So, the implementing rules and regulations of Republic Act 2629. So, here we will discuss the highlights of Republic Act 2629, Rule 35-1. So first is organization and capitalization requirements on Section B. So it states here that an investment company should be organized in the form of a stock corporation, and their minimum paid-in capital is 50 million pesos. And it also states that all the members of the board of directors must be Filipino citizens. Sales of securities as stated on Section C. So, any single investor in mutual fund, their minimum investment is 5,000 pesos, which should be paid in spot cash only. All proceeds from the sale of shares must be held by a custodian, which is a duly authorized local commercial bank of good repute. And their original proponents may not sell, transfer, or dispose their shares within 12 months of the registration. So, investment of the fund on Section D. So, it states there that investment companies may not change their investment objectives. That is why it must be stated in its prospectus, which is a formal document that provides details about an investment offering for sale to the public. And their minimum investment in any single enterprise must not exceed 10% of its net asset value. So, for example, investment companies may not invest 10% of their net asset value to, for example, Ayala Corporation alone. So, at least 10% of an open-end company's net asset must be invested in liquid or semi-liquid assets. So, some examples of this are treasury bills, time deposits, or special deposit accounts, and others. So, investment companies are not allowed to invest securities in margin purchases of securities, commodity future contracts, precious metals, and unlimited liability investments. And for their total operating expenses, it must not exceed 10% of its total net worth. This is to prevent affiliated persons of the investment companies from charging excessive fees. So, investment companies are allowed to borrow or incur debt provided that there is at all times a 300% asset coverage for all its borrowing. So, in the event that their asset coverage falls below 300%, they have 3 days to reduce its debt and to bring their asset coverage back to at least 300%. So, they are not allowed to participate in an underwriting or selling group in connection to public distribution of securities except to their own capital stock. So, investment companies are not allowed to purchase from or sell to any of its officers or directors or members any securities other than the capital stock of the company. So, redemption of securities as stated in Section E. So, investment companies are required to compute their net asset value per share on a daily basis, and it must be posted on at least 2 newspapers of general circulation, and it must also be posted on a conspicuous place at the principal office of the fund and all its branches and redemption centers. Redemption amount will be based on that net asset value per share, and 12 o'clock noon is the cut-off time set for redeeming shares from the fund. So, if there are any requests of redemption after the cut-off time, those requests will be considered for the next day. Payment for shares redeemed must be effected within 7 banking days. So, investment company manager, as stated in section G. So, if there are any person who intends to be an investment company manager, they must first register with the Securities and Exchange Commission, and they must also have an unimpaired net worth of at least 10 million pesos. And for the reportorial requirement, as stated in section I, investment companies are required to have a monthly report that contains the total amount of received from the sale of shares, the total amount of redemption, the total number of shares outstanding at the beginning of the month, the number of shares sold during the month, the number of shares redeemed during the month, the number of shares outstanding at the end of the month, and the percentage of the outstanding shares owned by the Filipinos. So, that is all of my report for investment companies.